Good afternoon, Scott Redler, T3 Live. Welcome to Monday's recap. I'm going to do this fast. We came in today, every bear was growling on the street about a 3-month correction by Goldman Sachs, a 15-20% correction by Faber, and you want to name it, everyone was writing about their big bearish calls. So, made sense, have a little caution. Let's look at Friday's low, see if we could break below them and stay below them and see commitment to the selling, or do we break below it, put a new pivot in and then reclaim it and then be in the same type of trend that we've been in for multiple months. Well, if you go real quickly, let's just go right to the spiders and let's get into it. Okay, actually we'll do the SPX. Here are the trends that we've been drawing. Okay, this was your 2 to 3 month trend that we had right in here. Okay, this is the same type of spot when I think everyone was making their big bearish claims and we broke higher. Hopefully you switched some gears. Here, we've been riding this 21-day, and granted it's been hard to buy strength, but if you short weakness, if you shorted the 21-day here, or even this morning, you're definitely a little bit frustrated, okay? It did feel as if maybe this was different, okay, and we traded below this area and came back above it, and so far looks a lot like we've seen. You go to your 5-minute chart, it did happen quick. Let's do it with the spiders, I guess, where this was your first move off the bat. Okay, you had to be real fast, right? I know I was short spiders, I was short spiders and long apple. I think those were my 2 overnights with a little some pieces of other stuff, and added here, took some off, and then I said, you know what? I'm going to put my stop in. First, obviously, this took place. It came back and reclaimed this little lower pivot, and then I put my stop in when I went to the gym. Right around here, I think I talked about saying, if the bears want to keep control of the day and maybe make new lows, you'd have to get rejected at 97.30 or 97.50, and lo and behold, wound up going all the way up to 198.10. So you go back to the daily chart, and okay, this is the SPX, very similar to the spiders, and here you go, riding the 21-day, riding it, okay, and it has not broken. And I know, listen, everybody wants to catch the big one. The big fall, the big crazy crash correction, and if you reduce risk into this, it's fine. But pressing shorts into this has not paid off pretty much since earlier in the year, right? If you did it here, you got hurt, and if you did it during this entire time, you did it. Yes, there's been some spots to maybe sell some strength, but overall, this channel is still intact, and maybe one day it'll change. And until then, try and keep looking for longs. And there were quite a few of them today. I came in. Long apple, talked about the strength and the high level flag on Friday. I'm still in some, and still moves well. Here's your gap up after earnings, and then lots of plays sideways. There could have been an ad, descending channel. That's when it corrected, another nice ad. Then here's when it responded well on earnings. Could have been another nice ad, and then today it triggered above Friday's high of 97.88 and closed above 99, and we shall see if $100 will be tomorrow. I hear a lot about the 100 now, so it always gets me a little skeptical, but I don't think that it's just a trap. But I do have less tonight than I had on Friday, but I'm trying to stay with the trade. It's been a great stock trend since iPhone to head. We called $100 here when a lot of people were saying, oh, it's dead money now, it's Microsoft, whatever. It's been a really nice move. Anyway, Google held where it had to. Small reversal. This trend still intact. If you want to draw it from here, still above the 21-day. Here is at earnings low, kind of retested it again. Nothing spectacular, but it's trending. It's just not a lot of momentum there. Amazon did a whole lot of nothing, but that earnings was weak, and now it's in the penalty box. The question is, does it fill a portion of this gap and give us a trade at some point, or does it go sideways, leave this open, and give you downside follow-through? Stay tuned. Netflix, which has been correcting, gave a small red dog reversal today. Nothing to write home about, but this was the earnings day when pre-market it couldn't get above this, and it's been a short since. Some guys made money when it broke below this 435. So today, it's trying to hold the 21-day. It's got a hell of a lot of resistance there. I'm just kind of avoiding it. Some guys made some money when it went from red to green, which we like to do as a trade. Facebook shook the tree a little bit. Early on, when the market got really weak, it traded into the gap. And if you were real quick, I guess you could have made money short, from did a flash trade below 74.51 and wound up hitting 73.85, so 60, 70 cents. As an active trader, that's decent cash flow, and then came back up and showing you that it needs some time. Didn't fall apart, but it also shook the tree up a little bit. You go to your 5-minute chart because people are like, how could you have maneuvered this? Early on, here was I guess the start. Okay, this was I think close to pre-market. So right here when it broke this bear flag, right at that level, the 74.50, gave you a nice little swoosh down, right? Gave you, but you had to take, if it was a day trade and you were looking for to trade in the gap and you were hidden bids at that level, okay, it actually worked. I like that trade here and there. I didn't do it today, but then it had a quick move back up. So if it wanted to continue lower, it probably doesn't reclaim this little spot or half of this bar. So quick move down. If it wanted to bounce up, that's probably where it should have failed. And then maybe add continuation. Instead, it's like a V bottom, higher low, penetrated a little bit beyond. So it squeezed the leftover shorts, then gave you another higher low before rallying back up, but just wasn't ready to to make a decision if it wants to make new highs yet. But all in all, decent two-way trade. The charts could have told you what to do there. We've been talking about this. It's come a long way since this gap and this gap. If you look way back when, how many days did it take? But this was, lower levels and different type of trade here. But this gap, let's get to it, was right here. It took 3 days. 3 days, and then it took out the high, and that started that run. But again, it was very depressed. It was coming out of a cup and handle pattern, and the world was negative. The consensus was different. It was under-owned, and this was a great gap up. So even if you didn't, accumulate it like the funds did in this area, once it gapped up, didn't fill it, that's what started that run. Learn that pattern because that's powerful when it takes place. So now the question we were just trying to figure out is, was this an exhaustion gap like you had back here, or does it hold? So I think we need more data. Ultimately, it looks like it's hanging in there okay. I'm going to give it a few days before I get very active in it again. So we'll see what's happening there. LinkedIn continues to hang around. This stock was Sperling's play of the week last week, and it triggered above 163. It's flagging in front of the 200-day. I do believe earnings are, I think, Thursday. So maybe it tries to make one more move before earnings. The stock's been in a crazy downtrend for almost, how long has this been? This has been a pretty long time already, since the peak here in September. What's that? Is that going on almost 2 years, I think. So, we'll see what happens next. Sperling thinks it gets above 200 if the report's decent, considering the type of pullback that it's had. We shall see. As of right now, it's been a really nice trade, and maybe there's another day trade the next day or so if the market hangs in there, maybe even on Twitter. I was trying to listen to what everyone had to say today, and I would say most people were very negative on it. I think that people are like, oh, expectations are so high now because of Facebook, but I don't really think they're that high. People are very short this still, and this was that big move, and since then it hasn't really done anything. Remember, we had this small little trade at 35. I know I use Twitter a lot, and I think that people who know it well can't live without it, and I think that they're going to be able to monetize their subscriber base, get some ads in there and this and that. So I'm in some calls. I'm not bullish enough to be long the stock into it. After hours tomorrow, if you want to trade it, maybe 39 is a level, and then you have 42.83. So this is resistance 1, resistance 2. I'm going to be in the calls because just in case it's not enough, it's got a high P, high valuation, maybe it does trade down. I think Kramer said something like he would rather buy it below 30. So that doesn't mean it's going to get there, but whatever. So, he's usually, I can't say it's the opposite of the consensus, but, or he is the consensus. But anyway, this is it. I'm going to be along the 40s, and I'll hopefully trade it after hours, and that'll help that. Yelp, thank goodness I haven't bought it the last few sessions, because every time somebody goes to buy the offer, it hasn't gone yet. Its earnings are on, I believe, Wednesday or Thursday, so we'll see. I did buy a little Groupon today. I'm just I don't even know why, to be honest. It was a little day one on some volume. Sometimes it leads to a day two. Went early, so I figured maybe it's worth 2-3% or something. We'll see what happens. But this, it goes sometimes when it wants to go, but this was just a little bit of a whim. In retail, some guys were looking at cores, which gave a nice little lower level trade. Stock is broken, but You could still make money. Here is your reversal that day. Then it held the top end of it, and now it's coming into the gap to be filled. If you were long it today, maybe it took a little bit overnight. Some guys were talking about this JWN. I think Nordstrom's is the name, and it's held this entire gap, and who knows, maybe it goes. I myself got back into a little Lulu. Stock has been fully annihilated, and I love their clothes, by the way. Love it. Anyway, you know, they do for endurance athletes make good clothes, and Under Armour had a decent report, and whatever. At this point, I didn't get caught in it. Nice little wide range bar, held the top end of it. I figured I might be buying it for momentum above this, you know, at some point, so buy a little bit here, and who knows, maybe it wants to test this area, and it's probably at this point, look, it might not be a PE that looks cheap, but it's probably, you know, some value guys might be looking. Anyway, it's just a trade. So here we are. You know, we're in almost August, and there's a lot going on this week. You know, this week, and with the Fed, and with GDP, and with the jobs number, and earnings. And I hear complaining, and I hear banging, and you know, you don't have to be in a lot of things. I know for me, I gave back a little bit of money here and there, trying a few things because I tried to, you know, just be involved, and sometimes you just don't have to be involved. I know Tesla hurt me today. You know, it's been very wishy-washy. I think I just lost my data feed on what's it called, on eSignal, so it'll just come back to me. But it was worth a try, you know. But just don't get too big. Same way G Pro. I know I looked at it and lost a little bit of money here and there too. But that pattern is getting tight, and at some point it might go, but it might need earnings, and I think earnings are on Thursday. I got to commend Marianne. Sorry, I call her Marianne. It's not. Did not pronounce it well. She was all over that Loco on Friday. You know, if you look at that chart, which I can't look at for you right now, you know, you will see the art of the first day. What that is when an IPO opens, it puts in a opening print, sometimes a high print in the first 5-10 minutes. Sometimes it's a great IPO, and sometimes it's not. How you measure the supply and demand is whether or not it can get above the opening print or the opening high and stay above it, and then sometimes it extends. I think I just got my in my chart back here. We shall see, and I'll go to the 60-minute chart, and you know, look what happened here. Okay, this was your open. This was your open. Let's go even to a 5-minute if we can. Let's go. It's hard to see here, but here is your open. So you write this down. Okay, boom, and it's not a trade until it gets above and stays above. And that's what happened right there. Let's see if I can get a 15-minute so we could see it a little bit better. Okay. So that is, you know, your accumulation spot. That was your spot when everyone who got the deal for free, all the investment bankers who gave it to their buddies, the sales traders, whoever they are, saying, I want a free lunch. I want to sell it to all the people who are going to accumulate and be involved longer term. And all of a sudden they absorb all that supply. And once that supply leaves and the demand is there, it goes. And nobody knows where it's going to go because, again, there's nothing to your left. But look what happened once it traded above the IPO high there of 1884. Boom. And then you had another level here around 2020. And then from there, all it is a 3- and 5-minute chart that you can go by because there's not much else to go by. You had a nice bull flag continuation to this. Continued again. Some guys took it overnight. If you took it overnight, hit a peak, came in, got tight again. And then I think some even traded it long for this, for 33.38. And now we're 2 days in. It's been a really nice thing to do over the summer if you stayed with it. I did not touch this, but a lot of people in the VTF did. So, you know, sometimes, again, I'm just an offensive coordinator. I put it in my morning note to look at today, but I didn't have the luxury of being involved. But if you did and you had the strategy, boom, 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 you know, you made nice money. I think some people had a bigger trade in this than they had in, you know, Apple that was kind of calculated or other things. So just, you know, be pleasantly surprised when situations like this arise, and you need to know the strategy in order to take advantage of it and execute on it. The bank's kind of hanging around, you know, the semis, just to let you know, like the SMHs. Sometimes you get to, you know, a moving average and you hold it the first time. You know, I talked about how, you know, things could happen fast, and this was a nice trend that the semis were in, okay, and then boom, your first potent day didn't amount to much, but then this potent day got, you know, had some commitment to it because it didn't reclaim a portion of it like it did here. which gave you some clues that the weakness wasn't in control. And then you had downside, and then we got to the 50-day. So if you pressed here after 1, 2, 3, 4 down days, it's the same as trying to buy 4 up days. Okay, your execution's wrong and your timing's wrong. So now you had a reversal here, okay, almost a little red dog reversal, and now maybe it tries to bounce back to this little spot. So even if you're short and you've shortened the brain, entries and exits matter. And on day 1, day 2, day 3, day 4, you should be covering and maybe even looking for some type of scalp long that now we measure that. So there's a lot of symmetrical corrections going on where you have the Qs at the 8th day, right? All the Qs is at the 8th day, so that means the SMHs are weaker, okay, and they're at the 50-day. You have the home builders that have corrected a lot off the highs. Like you look where they are. This is almost below that 30-50, so this has not been the place to be. So if that changes, okay, but right now it's been weak, and you probably have over a 10% correction from the highs or something like that, but nobody talks about it. Then you have the banks, which are still hanging around, okay, hanging above the 21 days, so that's kind of in line. Then you have the XLI, somebody was pointing out, that's now below all the moving averages, so that has started to weaken. And then you have the bios. What did that do today? Somewhat, I guess, middle ground. Didn't come all the way back like the Russell, which I'll get to in a second. But here you had this little wide range bar. The trend changed. Small little double top here. Now see if it could hold higher. I guess you could almost even do this too on a more intermediate level. And then the Russell for the first time trying to retest 1220. It held. So it doesn't mean it's going to hold tomorrow or the day after, but now you'll see what happens here next. Can you bounce back up and get rejected by the 21-day, or does it hover in the lower end of this range, really get weak, and then next time it probably wants to break in this area, as when you knock on that door, there's only so many times before it comes in. And that's really it. If you're looking to be short the weak sectors. If you're looking to be long, look for the right setups. If you're trying to make things happen, it's hard to do it in low volume over the summer. So pick and choose your spots. If you're not going to be prepared, you might as well go to the beach in the mountains and not throw away money, throw it away at the bar or having fun versus being at your desk and getting frustrated. That's no fun. And we'll see what happens as the week progresses. We'll see if all the bears that have been coming out of the woodwork are right. In order for that to happen, you have to trade below the 21-day and actually hold below versus play around with it. So here we are with two-way trades. Take them. You're better off selling strength these days and covering weakness versus buying high and selling higher. That's hard to find. In the same way, shorting weakness and covering lower has been hard to find too. So when that's the kind of trend we're in, you make adjustments and you trade accordingly. Have a great night. See you tomorrow.